Thank you, Carl and Courtney. Welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. The record rally is front and center. Stocks hit all-time highs. The investment committee is standing by with their playbooks for these very lofty levels. Joining me for this hour, we have Jim Lebenthal, Shannon Sakosha, and Jason Snipe. Before we get the discussion going, quick check of the market. You can see a bit of a mixed picture right now. The Nasdaq, the best performer, hitting a new intraday high, up about 0.25%. The S&P pulling back very slightly from its all-time high, still above 6,700. It closed above that level for the first time yesterday. The Dow pulling back fractionally as well. Jim, you're right here. Why don't we start with you? Right now, we're seeing a market that continues to hit highs even as we enter a shutdown. We entered a shutdown yesterday without any clear end to it in sight. Is this a non-event for the market? It may be an event for the economy. We'll talk a bit about that some more, but is this just officially a non-event?
History shows that government shutdowns are indeed a non-event, both for the economy and for the markets. Now, in the short term, there may be some effects on things like maybe a rise in jobless claims, depending on how furloughs are treated, maybe lowering airline traffic, things like that, but very temporary, not things that are going to interrupt the overall trend. And the use of the word trend, Frank, I think is very important here. You know me, you know I'm a fairly analytical person. I like to use numbers. I don't like to engage in the banal, trite sayings like I'm about to say, which is that the trend is your friend in the markets right now.
Okay, which trend, though? Are we talking about the trend of the Fed cutting rates? Are we talking about tech hitting new highs? Is it artificial intelligence? You got to name one trend.
Well, I was going to, my friend. Start off with keep it simple.
You did it, it was trite.
The equity markets, all right? The trend is higher. And you have to think, I mean, now I'll go a little deeper. Let's go into the AI trade. If you're out there and you're saying to yourself you're going to sell NVIDIA, like, really? With this amount of momentum behind it? Sure, get behind whatever bear argument you want to make, whether it's DeepSeek or CapEx one day is going to fall off. But really, with this momentum going, you're going to sell it? Good luck with that. And I think when I speak to the trend being your friend, what I'm specifically speaking to is that any dip in the markets is highly likely to be bought. Now, of course, the markets can go down and probably will sometime this month. But consider that something like 25% of professional managers are beating their benchmark this year so far. That means the other 75 are feeling a little bit desperate right now, and they're going to buy any dip. And actually, it's not just AI. So again, Frank, giving you more on this, and not to take anything away from Shannon and Jason, what you may want to say, but if you look at the strong recent rally in pharmaceuticals and healthcare, little give back today, I got it, but still a strong rally, that is people saying, okay, I've got to catch up. Maybe this is a way to do it without having to take the add to the AI that most people already have. I can look at healthcare. I can look at financials, any of a number of areas, meaning the trend really is towards an everything rally here.
All right, Shannon, I want to come to you with kind of dovetailing off what he had to say. If you look at the trend over the last week, short time frame, but over the last week, the S&P equal weight outperforming the market cap weighted S&P. Another area of the market that's hitting an all-time high. We talked about tech, utilities. Now, I think a question for you, is that a broadening or is that simply a trade related to AI where people are seeing the incredible amounts of power needed and utilities are the beneficiary, or is it a safety trade, a broadening? I mean, interpret this one for us.
So if we're talking specifically about utilities, then Frank, I would say you could look over the last year and there's been significant correlation to the AI trade in terms of how utilities have performed. So if you look at from a year-to-date perspective, utilities are one of the top sectors in terms of performance out of the S&P 500. However, what I think that it's important here is that there's more than just the AI trade as it relates to utilities. So we talk a lot at Neuberger about the potential for a global industrial impulse to help drive growth in 2026. And so if you think about the power demand that exists not just from the AI trade, obviously more pronounced in terms of talking about data centers and the power that's necessary to be able to fuel this AI revolution. But you look at the sort of the backlog of infrastructure improvement that is necessary. You look at the necessity of improving infrastructure, not here just in the United States, but also abroad. And you look at things like the fiscal stimulus that's likely to unfold in Europe. So there is a bit of a push or a tailwind in terms of utilities. I would say I would be hard-pressed to find people looking at the broadening trade as an example of people looking to potentially hide out in defensive sectors. That's really not where we've seen that. If you look at something like consumer staples, for instance, the performance just isn't there in terms of wanting to potentially diversify away some of the beta that you're getting in the U.S. large cap names, particularly technology. And so for me, when I look at this, there are certain sectors that are no doubt, potentially kind of the second derivative of what's happening in the AI trade. This broadening out, though, has really encompassed sort of the next trend, if you will, in terms of there's been a lot of CapEx put forth in AI. where is the next phase of that CapEx? And that's really going to be in sectors outside of technology that are going to start to integrate and implement some of this innovation in their businesses.
Is valuation also an issue when we're looking at the broadening? If you look at technology right now, it's trading at about 31 times forward earnings. The 10-year average is about 21.5. Do you think investors potentially, at least, getting some religion about these valuations, specifically in the tech sector?
I would say it's less about getting religion because, honestly, we haven't seen the deceleration in earnings and technology that we maybe anticipated coming into this year, which we thought was going to be a driver of the broadening out. Instead, what I think you're seeing is that, there are opportunities outside of those technology names. I would also point to the earnings picture. If you look at third quarter earnings, Frank, by many accounts, those look fairly conservative. And so if you think about the potential for a continued earnings growth from technology, but also maybe more conservative estimates in some of these other sectors, I think it speaks to getting ahead of some of the positioning. We only have 2 weeks until earnings season kicks off in earnest with the financials, and so kind of positioning ahead of that. That's what I'm looking at in terms of maybe less concern about valuations, more positioning for what could be another strong earnings season in terms of percentage of beats.
Jason Snipe, what moves are you looking to make? Are you looking to trim maybe some winners? Because we can't forget, we don't really know the outcome of this shutdown. And while historically, it doesn't have a big market impact, the longest shutdown ever was under the Trump first administration. It was 35 days. That would certainly have an economic impact that could impact a lot of these big name tech companies and other parts of the market.
I mean, it's 35 days in 2018, but the market, the S&P was up 10% during that time. And then we've had 14 shutdowns since 1981. It's been historically a non-event, right? GDP's up over close to 3.8%. As Shannon described, we have earnings starting in earnest in 2 weeks. We're expecting close to double-digit earnings growth for the for the broader sector, for the broader segment. So for me, as it relates to, you asked me what would I be doing here, I think Jimmy makes a great point on the chase. The chase is real. Obviously portfolio managers, there's a lot of lag there where we're not performing as they had expected for the year. So, we have to submit those report cards at 12/31, right? So I think that's a real story. I think as it relates to the earnings story, clearly it's been a lot of concentrated growth in the AI names. I do think some of the more cyclical oriented sectors, healthcare obviously has had a nice bump. This week has been a lagger so far all of this year. But I would be looking to reorient some of my exposure into some of the sectors who have not grown.
But wait, where's that money coming from? Are you trimming some of your winners to get into those sectors that have been unloved? Or are you simply just widening out your bets?
I think there could be some. I think obviously it's always prudent to take a little bit off the top from tech. Tech as you described. 30 times earnings. These are lofty valuations, but the earnings have supported it. That's why we've seen the expansion that we've seen thus far. So I think it's a little bit of trimming from some of those sectors, but I think also, for folks that have some cash on the sidelines, it's looking to more of the cyclical-oriented names.
All right, so a little bit of trimming, but you still want to stay with what's working.
Absolutely.
I want to bounce something off you, Jim. I'm going to get your take on this first. Tom Lee out with a note earlier today. He says, among other things, history shows probabilities favor the S&P at 7,000 by the end of the year. He goes on to say there's a strong seasonal tailwind underway, and the upside is higher given the Fed is dovish. And I want to ask you guys about that. Are we sure the Fed is dovish without the information from the jobs report, potentially from CPI, potentially from PPI, but I'm going to continue. We urge looking through the messiness of the shutdown and even the lack of data that stocks are weak. He says he would buy the dip. Don't go defensive. Tom Lee saying do not go defensive. Agree or disagree? And is every dip buyable? At a certain point, doesn't that strategy have to not work?
Yeah, of course it has to work at some point in time. And again, I don't want to be carefree in saying that right now the dip is buyable, but the dip is buyable right now. Look, and I read Tom's notes. They're always worth reading. And one of the things he pointed out, and this is to your question, Frank, is that with the Fed kind of now flying blind, and all of us flying blind in terms of data, they're likely to err on the side of caution, i.e. they are more likely to cut than not cut. Now, the next meeting is when? October 29th, I think. October 29th.
Decision on the 30th, I think.
Yeah, so we may have the shutdown over by then, but still, if you look at the probabilities, I believe they're close to 100% that we get a cut in this month. And I think, again, this shutdown really corroborates that. With the overall target of 7,000, sure, why not? That's roughly 4% higher from here. Again, I don't mean to sound carefree. You know I'm kind of an analytical person. We all know that, and we all are. But this factor of people chasing performance, it's not to be trivialized. It's happened in many years like this where you've had a strong year, whatever we're up 14-odd% year to date on the S&P 500, and especially with that whoosh down that we had post-Liberation Day, let's face it, some people, some managers raised cash. And now they're struggling to catch up. That was just simply, it turns out, the wrong move. I'm not judging them. It just was the wrong move. So any dip here is going to be viable. And as I think we're all saying, it inures to more than just the AI companies' benefits. I was making the point, but I want to accent it. We are talking about the future. And believe it or not, we are actually humble, and we admit we don't know with 100% certainty what the future will hold. We give you our experience, we give you our professional expertise, and we make the predictions because that's what we're asked for. But by no means is anything about the future a slam dunk.
That's a fair assessment. It's almost a Dead Poet Society moment right there. I like that.
Are you comparing me to Robin Williams? I'll take it.
Jason, I'm going to come over to you. You mentioned some of the unloved sectors. One area I've been talking to CEOs in is the materials sector. Double digits earnings growth expected for Q3. It's kind of that secondary play that Shannon was talking about when it comes to AI. If you're going to build a $500 billion data center, you need rocks, you need water, 100%. You need concrete.
Yep.
Are you seeing opportunities in the materials sector?
So I'm not there yet, and I think one of the things for me is there's been severe inflation in the kind of building materials. I mean, to build now, it's up 30% year over year from what it was last year. So I think there will be opportunities. I think energy is another space. I think, obviously, as I mentioned earlier, healthcare. I mean, we saw the deal. Well, I know we'll talk about that a little bit later, the Trump deal with Pfizer and what that will be, for the healthcare sector in general. But I just think, like to echo my points earlier, I just think that these other sectors that have been unloved, I think breadth will be better in 2026. I'm also thinking about the big, beautiful bill that will be stimulative to the economy, and I think there will be other sectors that will participate that have not as of yet.
Well, I'm getting a side eye from Jim. Jim and I have been talking about this. No, not a bad one.
Yeah, it's a good side eye.
CRH. You're a shareholder of CRH, and that's one of the CEOs I talked to. Their investor day this week. Stocks up about 5% this week. One of the things they really talked about was just organic growth, about 7 to 9%. And on top of that, they're saying, hey, we're an AI play. We get low to single digit, mid-single digits of every AI build out. So go ahead, Jeff. This is your moment.
Okay, sorry you made me laugh on the AI thing, because these guys are building roads and runways. And
but also water supply.
I got it. It just made me chuckle, okay? And I was there the day after you. You interviewed Jim Minturn, who is a very no-nonsense, get-it-done kind of guy. Now, I'm speaking specifically about CRH here, but it applies to the materials sector in general. So if we're building stuff, we're going to need paving material, we're going to need steel, we're going to need copper, and yes, there's that mine closure that's gone on that's pressing up copper prices, but this is a simple trade. We're building things, whether it's data centers, whether it's infrastructure, whether it's manufacturing, reshoring, and you've got a company in CRH that, as I said, is no nonsense with a 55 track record of setting goals and then exceeding them. I think they're going to continue to do that.
All right, I want to toss it over to you, Jim. Looking at chips have actually been outperforming software over the last couple of months. That's been something a lot of people have been looking at. Are you still bullish on chips, which are a cyclical sector? We're talking about financials, materials. This is also a cyclical part of the market. Do you think this rally continues?
I think it's a good question, and even more so, this is not a slam dunk, but yes, I'm still bullish on chips. And the reason it's not a slam dunk is because we all know about the valuations. If we take a look at NVIDIA, just as the bellwether, probably 30 times forward earnings, I'm plus or minus 1 on that. That's traditionally not where a semiconductor sells. However, the growth rate is there. At some point, that growth rate in earnings per share will fall off. I don't think it's in the next 2, 3, or 4 quarters, so I can live with it. And to the point that Christina was making, it's not just NVIDIA. One of the names that has been on the move, which I own, it hasn't set a 52-week high, so she didn't mention it, but is Qualcomm. And Qualcomm, obviously, we know it for the smartphone chips that it produces, but it's been getting more and more into automotive and, dare I say, into data centers. It has been. I see your eyes grew wide. Yes, it has been getting into data centers. centers. My point being is it's not just NVIDIA. And by the way, a valuation on a Qualcomm, something around 14 times. It's not like NVIDIA.
All right, it's not just NVIDIA, but it seems to be chips pretty broadly. One of the things that Christina was looking at was a kind of a shorter time frame for this chip rally. If we look at a longer window, chips are outperforming software over the last 3 months, outperforming cybersecurity. Jason, I know you're a big cybersecurity investor. If we're looking at that second leg, is it maybe time to jump off the chips and move over to the software? I was actually talking to JP Morgan's head of private investments earlier this week. She believes that the next rally, the next leg of this rally is going to be in software, actually in the private markets, but in software more broadly.
There's going to be some cyclicality here in this trade, Frank. If you think about, sort of the enabling of AI that really has been driving the chips trade. If you think about what the next leg of that in terms of that, integration of that innovation, software is going to play a big role in that. And so companies are going to be looking to make those investments. I do think we just see some ebbs and flows in this. There might be a period where people think that it's, semis are extended and maybe they feel like they're anticipating that next phase of the actual business implementation of this. But I think I think all of my colleagues would agree here, active stock selection within software is going to be critically important because there are going to be some winners and losers in terms of AI implementation and innovation. And so I think you really need to be careful where you put those eggs in the basket. And it might be a bit different than what we've seen in the last 10 years.
You said it's going to be winners and losers. Are you talking about chips in particular?
In software. No, in software.
Okay.
Yeah, in software. Because I do think that there is some disruption that AI is going to create, especially for companies that rely on those, a lot of those seats. Probably fewer seats, but also seats that are going to need to do more with less in terms of the enablement from AI.
All right, Jason Snipe, I know you own a number of cybersecurity names.
Yep.
Looking at the BUG ETF, that's one of the more popular ways to track the cyber sector. Down about 3% over the last 3 months. What's going on? Because the AI revolution, if you will, was supposed to superpower cybersecurity because you would need more of it. Instead, we're seeing investors get away from that trade.
Yeah, so for me, Palo Alto is obviously the name that we're highly invested in. It's a little bit cheaper than CrowdStrike and some of the others. There has been a little bit of a pullback in that name, but I really like the deal that they just consummated with CyberArk, which I think is kind of in the identity business, which I think it will be accretive for them in the long term. As it relates to kind of the overhang of AI and getting back to a little bit of the semi discussion, I think part of the growth has been, maybe this story of an AI bubble was a little bit overdone, right? And I think at least in the tactical in the short run, I think the other thing that kind of comes to mind is, the CapEx story is at least a 2 to 3 year story, right? So I think there's very tangible earnings in the semi space. I think that's clear to me. And then the last thing I would say is just on the SMH. The SMH is up almost 40%. To Jimmy's point on some of that selling that was done in April, it comes back to that narrative of the catch-up. And I think if you're looking at that and you're saying, wait a minute, I need to be here because at least from a tactical perspective, the earnings are durable, let me go ahead and make an allocation.
Frank, integrity demands that I admit I'm getting my face rearranged in Adobe, okay? And that's representative of the non-Palo Alto networks.
Yeah.
That's DocuSign, it's Salesforce. And there's a question here about whether these are cheap stocks that we should be picking or whether there is a secular decline with AI replacing not only the products, but also the seats from which something like Adobe gets its revenue. And my call on this is I'm sticking with Adobe for now. It has consistently outperformed. I think we can say the same thing about Salesforce. I don't know if you're smirking. Shane, I got to tell you, I'm smirking at myself with just how badly I'm doing at Adobe. I'm sticking with it for now, but I have to admit, I'm just, not having a good time with it, Frank.
It doesn't look like it. We're looking at the year-to-date chart just now. And welcome back to halftime. Let's get to some stocks on the move. Berkshire to acquire OxyChem for $9.7 billion. This is the chemical business of Occidental. $9.7 billion, all cash deal. You're seeing Berkshire pull back a little bit. Oxy pull back a lot, but you're a Berkshire Hathaway shareholder. What do you make of this deal?
I think it's intriguing. I like it, but I have to put it in perspective that versus a $300 billion plus cash pile, this is 3% of that pile is probably what he earns in about 8 months. So it's interesting, but it doesn't move the needle that much.
All right, interesting. Why doesn't it move the needle? Clearly, this is very adjacent to the materials sector, the idea that you need raw materials for a lot of the production that we're seeing.
It's a tuck-in. It's a tuck-in acquisition. I like it, don't get me wrong, but this isn't, I mean, they've got a huge energy, they have a chemicals business in Lubrizol already, so it's a tuck-in. It just doesn't change the thesis. If they were putting something together that had like many tens of billions of dollars involved, then I'd be like, whoa, what's going on?
Okay, fair enough. Again, Berkshire Hathaway pulling back about 0.75%. Occidental actually down about 7% right now. Want to move on to some other calls. Colgate-Palmolive, target cut from 98 down to 91, but maintains the outperform at BNP Paribas. Jason, you own this one. We were talking a little bit about this earlier. Yeah. Staples under quite a bit of pressure. Yeah. Actually, a really good note. It's not specifically about Staples, but from Bespoke on consumer-facing stocks over the last couple of months. Really talking about retailers, but I think it fits the bill with Staples too. Under a lot of pressure. Yeah, what do you make of this?
Sure. Yeah, so for Colgate, it obviously is down 13% year to date. I think for me, there's some deceleration growth in personal care. I think that's hurting the stock. Persistent inflation in raw materials. We were talking about raw materials earlier, so I think that has been a problem. But, for this particular stock, I like 3 to 5% organic growth, sales growth for the names, raising dividend in 60 straight years, so the dividend now is at 2.5%. Their management team also is has multiple levers on managing costs and extracting inefficiencies. So I think for me, this is one that obviously has been in the penalty box so far this year, but I think the earnings recovery will come through into next year.
All right. We were just kind of showing that chart. We showed it for a second with the retail names under pressure over the last couple of months. I want to talk about the consumer, Shannon. Is this a troubling sign that these stores that they don't only cater to lower income consumers, but a large part of their customer base is lower income consumers? Is this a warning sign about the broader economy, the fact that these stocks have been moving considerably lower, almost a straight line down?
No, I think I see it a little bit differently in terms of the margin that these companies operate in. And so if you think about the slim margins on many of the SKUs that they have on the shelves, I think that investors continue to be concerned about, potential continued tariff transmission. And so you're also, potentially looking for a continued trade down, which we really haven't seen from higher income and higher middle income households into these names. But I think this is more on just concerns that maybe we haven't seen the full margin impact of some of the tariffs. That's just in my view.
All right. Not a call, but some news. BlackRock actually launching an AI tool for financial advisors. Its first client, Morgan Stanley Wealth Management. Jim and Jason, you both own BlackRock. Jason, I'm going to start with you. What do you make of this?
I think it's a very interesting tool. I think it speaks to innovation for BlackRock. Listen, I mean, AUM growth is up 15%, revenue growth was up 13%. It's the largest player in the ETF business. So I continue to like this name. I think they're focusing on the right segments, and we'll continue to hold it as a financial core holding in the financial sector for us.
BlackRock shares up just about 0.5% right now. And welcome back to Halftime. Crude currently on pace for its worst week since late June. Jim, you're kind of our crude expert here. You own Cheniere, Exxon, Transocean. What do you make of the moves in the oil market? We've seen some geopolitical volatility, some tension between Russia and Ukraine, but still we see oil weaker.
Yeah, bottom line is I think you can make money in the energy stocks, and you've got a lot of different ways to play it. ExxonMobil or Chevron are frankly the biggest names and therefore relatively speaking the safest. I'm not saying they're safe. I'm saying they're the safest within the energy space. They're all up and down the product cycle from exploration to refining to marketing. I think if you want to take a little more risk, you've got the offshore drillers like Transocean, which I own. I mean, it's dirt cheap, and there's some news today that indicates that the majors are still spending on offshore drilling. But certainly if oil prices go lower from here, Transocean is not going to do well. The bottom line is you can make money in this space regardless of where crude oil prices are.
Shannon, I want to talk to you about the oil market. We keep talking about the strength of this economy. Everybody says the economy is pretty strong. We can go on the Atlanta Fed GDP Now tracker. It's going to show relatively strong GDP forecast. Why aren't we seeing oil catch a bid?
It's on the supply front. I mean, I think if you look at the next 12 months or so, this has been coming. This has been a known issue is on the supply side. So even though we have seen what we believe to be signs of improved demand, the other thing to think about is that, it's oil versus natural gas. And our view is that natural gas is much more attractive, especially given some of the electrification and changes that are being made in the grid. So I think you can be selective in this area as well.
Yeah, I believe it was Sam Altman that said some of their data centers are going to be powered by natural gas as well. Mm-hmm. All right. Trades, Jason Snipe, you're up first.
ServiceNow stock is down 14% year to date. They are starting to monetize their AI tools. I like this one.
Shannon.
I'm going to hold with my small cap trade, Frank. I don't know if I've made a strong enough case, but I feel like this is a trade you should stick with if you've been in it.
All right, Jen.
Vertex. We talked about healthcare earlier. We didn't get to Vertex. Now, it's got a great drug profile here, but I think the important thing is it has just gone into positive territory for the year. That's important. That takes it out of the tax loss harvesting category.
This is a name you already own, so you're buying more.
It's a final trade.
Okay.
I mean, but
I'm just asking, Jim. That does it for halftime.
Hey, what's up? This is George with Blue Cloud Trading. It's Thursday. It's October 2nd, and the markets are closed. It's 6:27 p.m., and what we're going to do in this video, we're going to cover the indices here. We're going to see what the markets did today. We'll take a look at the following stocks, guys. 22 stocks that were talked about on today's halftime report. Here's a list. What I've done is I've highlighted the strongest stocks. We're going to look at the technicals on these stocks. We're going to look at the S&P 500. Okay, we're going to look at the Qs, the Dow, the Russell, the Euro stocks, which once again is up more than the other indices today. We'll take a look at Apple, Tesla, Meta, and we also have these three stocks we're going to cover from our members' requests. So let's get started here with the index performance here. You can what you'll see is the Dow Jones was up just slightly, 0.17%, moved up in the morning, dropped, and then it started recovering a little bit, but basically closed very close to the prior day's closing price. NASDAQ, okay, it actually gapped up in the morning, came down to yesterday's closing price, that dotted red line that you see right there, and then bounced right off of it. It was up 0.39%. The S&P 500 was up just slightly, 0.06%. So gapped up in the morning, dropped, came back up. A lot of indecision here with the S&P 500. And the Russell 2000, okay, out of these four indices, was up 0.63%. So that one also dropped and then started recovering around 10 a.m. and just kept on going up. All right, now we'll take a look at the heat map. So this is showing us how the individual stocks performed today. Tesla took a big hit today, down 5.11%. Why? Well, mainly, take a look at this this article here from Business Insider. So Tesla stock whipsaws after third quarter deliveries beat Wall Street's estimates. So Tesla reported deliveries for the third quarter that beat estimates, but sales may have benefited from customers rushing to buy the EVs before the expiration of the key tax credit. Some caution that momentum could fade now that the tax credit is no longer available. So, yeah, there might have been a little spike, but as you'll see in a few, when we take a look at the charts, it's looking pretty bearish there for Tesla. Now, let's get back to what we were just talking about. So Tesla down. The telecom services like AT&T, T-Mobile, Verizon were down. Apple Oven was down 2.9%. You can see the financials down today, except for MasterCard. American Express was up. Capital One Financials up. Basic Materials did pretty well today. All right, a lot of the basic material stocks there. Medical devices did okay, but some of the stocks like AbbVie and Bristol Myers were down. And the consumer defenses were down mostly too. All right, let's take a look at the sectors real quick too. So over here we can see the exact percentage move up. Technology was up the most, 0.68, followed by basic materials and industrials, and energy was the biggest loser, down 0.94%, followed by real estate and consumer defensives. All right, and here's the 1 week performance for you. Healthcare up the most, 6.48% this week. Healthcare basically outperforming all the sectors this week. Here's a quick weekly chart so you can see how the S&P 500 has been performing, since April when it started to have this big run, and it hasn't really stopped, folks. The reality of the situation is we are still in a bull run here, bullish run, and ADX is still moving up on the weekly chart. It's still looking pretty bullish overall. Here's the daily chart. Today it was only up 0.12%. We could see that little red candle there, but it did get above these levels here. So all-time highs for the S&P 500 once again. All right. What about the Qs? The QQQ ETF, that also did something very similar, where it broke above these highs right there. And you can see, but it did create a little red candle. ADX is still moving up. Volume is pretty consistent. Nothing major to worry about here as far as I'm concerned. The Dow Jones also continuing its move up, only up 0.18%. Higher volume today. I do like that. Russell 2000 also popped back above well, it closed above it yesterday barely, and today it continued to move up. Now this 244, 46 level is a monthly level. So if I switch it to the monthly charts here, you can see that prior high going back to November 29th, 2024. We haven't really closed above that. We would need a monthly chart in order to close above it. You can see here that for September, it was unable to successfully close above it. So that's kind of concerning, right? There was a little bit of sell-off towards the end of the week. You can see here on the weekly charts, we had that reversal candle last week on September 26th, Friday. So we're still under that level. I'd be Russell 2000. It's looking okay today, but it's again, we're coming to a level of resistance that's very important. It needs to get above that, in my opinion. You got FEZ, the Euro stocks, as I mentioned yesterday, was looking the strongest out of all the ETFs. Now we've got ourselves, maybe it got a little bit ahead of itself, because now we've got ourselves a little bit of a reversal candle with this candle. Now this particular candle is called it's almost like a spinning top, because you can see the little wick at the top there, another wick on the bottom. I'd be cautious here. All right, now it could certainly continue its run. If it gets above the high of that candle, I expect it will continue to expand. The next level of resistance will be up here at that monthly level of $66.26. We're currently at $63.32. If it gets under the low here, it's more than likely to pull back at least down to the next level of support, where the Tenkan is. It might be another 2%, potential 2% drop if it comes down to that level. We are looking at a daily chart here. Here's a weekly chart. Okay, so FEZ on the weekly looks ultra bullish to me. What I particularly like is the fact that it's been in this consolidation stage here for multiple weeks, right? You can see it goes all the way back to mid-May, basically, and it broke through that 61.50 level, right, this week, and so it's moving. It's just taking off. Another thing I like about this one is the directional movement index, okay? ADX is moving up. That represents the momentum is increasing, the white line there. And we've got the positive DI above the negative DI. That's also very bullish. And yeah, we're using the Ichimoku indicator, folks. If you're unfamiliar with this, real quick, we want price to be above the 2 moving averages, the 9 period, which is the green line. That's the Tenkan. We want price to be above the Kijun, the red line, 26 period. We want the Chiku span, which is that white line, to be above that white line right there. That's today's closing price projected 26 periods ago. We want that to be above the candle 26 periods ago. And we want the Senko span A, which is the light colored blue line right there, part of the cloud, the Ichimoku cloud. All right. We want that to be above the Senko span B. And we've got that. It's also moving up. That's also bullish too. So you can see how the cloud was flattening out here for a little bit. Now it's starting to move back up again, just like the Tenkan and the Kijun. And these moving averages, unlike most moving averages, takes the highs, the lows, okay, divides it by 2. All right, so you're taking the absolute midpoint of each candle for the last, like I said, 9 periods there, last 26 periods. This purple line is the last 52 periods, projected 26 periods into the future. And the Senko span A is comprised by taking the midpoint of these 2 moving averages, all right in the middle, and projecting that 26 periods into the future. That's where you'll find it. So everything looks very bullish here on the weekly and on the daily chart, as you can see right there. The only thing I'm concerned about is the actual candle itself. As I've mentioned before, those types of candles can be the bearish spinning top. It's not, I don't know if I'd call it exactly a spinning top, because it doesn't have a wick that's equal in length to the one on the bottom, but it is a negative candle. What it's telling us is that the opening price here, all right, was higher than where the price closed, right? Understanding candles, you get a red candle when the body is at the top, and the opening is at the top here, and the closing price is right there. So that's the body of the candle. The wicks represents the highs and lows, basically, that price moved up throughout the day. VIX. Now the VIX, guys, the market volatility, that also moved up a little bit, 2.09%, not a whole lot. It's still holding under the Kijun and under the cloud, so that's good. We don't want this to be moving up. All right, that's volatility, and it can lead to a decline in the markets when that spikes, like it did back here in April. All right, now guess what? We've got 22 stocks to run through. I'm not going to spend too much time now that you understand how the Ichimoku, what we're looking for with Ichimoku. I've got these stocks up at the top here with the blue flag that represent the strongest stocks and ETFs. All right, that look great on both the weekly and daily time frame. I've reviewed both time frames. I'm going to be mostly looking at the daily charts though, and the ones at the bottom, okay, not so great. So it's basically 8 out of the 22 stocks are looking good. Okay, so let's start off with BLK. That's BlackRock Incorporated, and you can see here where yesterday price was under the Tenkan. It bounced off that Kijun and the top of the cloud, and then we've got ourselves a nice buy signal essentially with BlackRock. So I like BlackRock. Chiku span also, which is the white line there. You can see that where it was yesterday, it was under, or I'm sorry, it was inside the cloud, inside this candle. It's now above the candle 26 periods ago, that one. So the white line is above. That's what we want. And the cloud itself is bullish. And if we look at the weekly chart, that's also pretty bullish. All right. Let's go to CRH, another stock they talked about. This is in the basic materials sector. You can see the long extended consolidation here, right? This little box right there popped. What day was that? That was on Tuesday, September 30th. Now it's creating another little sort of almost a base right here. And so if it can get above these highs here, I expect it will continue to expand. All right. Whoops. Sorry about that. IGV, software index. This one here looks good too. This one popped right above the Tenkan and closed above it today. That's the software index fund. And here's the weekly chart if you want to check that out too. It looks bullish. I like it. IJR, that's small cap 600 index fund. That also popped up 0.30%. There's the Chiku span above price. Future cloud is looking bullish. I like what I'm seeing. The other thing I'm noticing down below is the volume is increasing. So that's a positive sign that these small caps are doing pretty good, and the volume is starting to, it seems to me like there's more and more interest by the day, right? For the last 5 days consistently, price has been moving up and the volume has been moving up, which means that there's more volume, there's more participation, there are more individuals buying it, right? There's more shares, basically. This is what that represents. The 5.6 million shares traded today of IJR. PANW, Palo Alto Networks. This one yesterday popped above the Tenkan. That's a bullish sign right there. Now it's gonna looks like it's gonna probably stall right here at this high. Okay, if it can get above that high, I think it's gonna probably continue. Now it's probably gonna also find some resistance right about there. What's that high there? It's 210.39. Okay, so you can see that it came close over here, it came close there. So 210.39, expect a little bit of resistance at that level, folks. SMH, semiconductor ETF, looking good. Although we did get a red candle, it was up 1.36%. It actually gapped up. So looks good. There's the daily chart. Here's the weekly chart. Okay, 5 consistent weeks moving up. XLK, that's technology, also doing the same thing here. All right. The volume has been declining as price has been moving up, so that's a little bit concerning. Less and less buyers, but it's been the price is still moving up, and that's the key thing. XLK did pretty good today. It actually got above these highs right here. Okay, actually got above it yesterday, and now it gapped up and up 0.54%. That's the technology ETF. XLU looks pretty good. Utilities. Okay, ADX is moving up. Positive DI is above negative DI. That's the daily chart. There's the weekly chart. Okay, now this is where things start to not look so great with these stocks. Okay, I'm going to show you the complete opposite of what you want to be investing in right now. Adobe's been in a very, very long depressed state here with a series of lower highs. Okay, do you see that right there? Just stair stepping its way down, and lower lows, right? So you can see actually from this low, we get that lower that's lower than the prior one, and there too. Now, the one thing with Adobe that I will note, if you look at this is a weekly chart. If we look at the daily chart, guys, it looks to me, okay, I did draw some trend lines earlier. If you look at this level right here from April, where it reached this low down here, came up, came down again in August. All right, do you see this? So it was around August 12th and bounced off of that, around that level, okay, of 330. Okay, so moved up, came back down, created a bullish hammer candle right there. Okay, and bounced off that 330 level again. So that's a triple bottom, which is a very bullish pattern. Let me show you guys that pattern real quick on the pattern cheat sheet here. So if we look, there it is. It's a reversal pattern. And it's, again, when you see the price has been declining, like it has been in this case, right? Dropping, dropping, dropping. Okay, so it's been like basically dropping here. Then it comes up to a certain level. It drops right back to that exact prior level, like we just saw. Moves up a bit, drops back to that same level, and then it bounces off that level again. So you got 1, 3, 5, right? All three of those levels. And it breaks through that prior high. Now, once that happens, that can be very bullish. Let's see what's going on with this particular situation. So here's the original one. Now, it would need to basically technically break above this high here. But, you know, based on the Ichimoku, the way that I trade Ichimoku, I'm always looking to see what's going on with the weekly chart. So here's the weekly. We've got to break through we got to get above that Ichimoku cloud right there. That's about $464.39, basically. That's when it will start making sense, because we still have this declining 200-day moving average. And yeah, so it's got a lot of work to do here, Adobe. I'd stay out of this one for now. Berkshire on the daily chart. There's a couple of things negative with this. You can see that the price has closed under both moving averages right there on the daily chart, and on the weekly chart, we've got the faster moving average. Okay, the green line under the red line, so that's bearish. Colgate also on the weekly chart looks very bearish, guys. It's broke through this prior low of 85.61. Looks like I had a position here and got out just in the right spot, looks like, back on September 11th. So if you go back into my member-only videos, you'll see that I closed that position on September 11th. Wow, that's really good timing. It dropped 26.15% since that move. Wow, since that closing. So, yeah, I'd stay out of Colgate for now. Consumer defensives in general have not been doing well for a while now. CRM, Salesforce is also under the cloud. I'd stay out of that one. It is finding some support on the weekly chart at the 200-day moving average, but it's a no-go here on the weekly. If you look at the daily chart, it's also bearish. Okay, declining 200-day moving average, not good. DocuSign also not looking good here. You can see where the 200 was flat, it's now starting to turn over here, and it might find some support right down at this level of 66.35. Here's the thing: it's really, really tough to pick bottoms. That's why you want to wait for that change to occur. You know, the sentiment to change and become more bullish, and you want to see it first happening on the weekly chart. This is not a good indicator to get in just because price got cheaper at this level. How do you know? I mean, I'll give you an example of what I'm talking about here. Over here, where price broke through these levels here, that Kijin's in there, broke under the cloud. Let's assume the price dropped to this level right here. And you're thinking, oh, it got really cheap. Maybe I should buy it. And in fact, there were some people that bought it up. You can see right there for like about 3 weeks or so. They pushed it up slightly. You know, they pushed it up maybe about 15%, 19% almost. And then what happened? It just dropped. It dropped 53% from there. That's a big drop in 2.1 months. And then what happened? They bought it up and moved up about 44% or so and dropped some more. This is a weekly chart that we're looking at. So that is what can happen, because you can see from this point, if I measure all the way down to these lows, that's an 85.3% drop in 2.1 years. Okay, actually, it even dropped even sooner than that. In 1.2 years, it dropped 85%. Stayed at these levels, 2.1 years. Now it's starting to show, you know, like it started to show some strength here. Found resistance at the 200-day end, dropped. Right, so from these highs here, it's already dropped approximately 36%. DocuSign is not something I'd be interested in. All right. This technology, I don't think has got the same interest that we've had with it in the back here in the 2020s. I'm sorry, yeah, in 2020, right here. It started to get kind of bullish here around September 6th, 2019. It moved up approximately 430% in 2 years. And then since this point right here in 2021, it just, I doubt that it's ever going to get up there again. Okay, LNG. LNG is Cheniere Energy. Here's the weekly chart, just sideways action. It's under the Tengen-sen, not good. And on the daily chart, it's under the cloud. So no on that one. NOW, which is ServiceNow. That's also inside the cloud. That's also a bearish. You can see the 200-day declining, not good. Oxy, Occidental Petro. You can see it dropped under the cloud today. It was actually looking pretty bullish until yesterday, right? It was above the Tengen-sen Kijun-sen, and today it had a big drop. Now there's a big volume bar too, and we can try to figure out what happened. It's real easy. You just go to use another software called Finviz Elite. Let's go to the up here in the ticker symbol, OXY. Let's find out why it dropped so much. All right. Scroll down a little bit. Look at all these downgrades, by the way. Okay, so here's the news, right? So let's see what this says. Buffett scores win in Berkshire's deal for Occidental Chemicals unit. Oh, we can't read it. It's not. It's a paid version. Anyway, yeah. For whatever reason, I mean, you can see also the profit margins are pretty low, 6.19%. Sales quarter over quarter down 8.12%. Sales year over year is down 1.66%. Performance year to date, it's down 10.48%. I'd stay out of this one, guys. Just doesn't make sense to get into Oxy. Qualcomm Inc. This one here is pulled back on the daily chart and bouncing off the Kijun-sen, but stalling at the Tengen-sen. So that's why it doesn't have a check mark. But I'm going to guess the weekly chart also. Let's look at that one. That's okay. So it's inside the cloud. That's a no-go. RIG is basically entering the cloud, it looks like, for the first time. That's that's Transocean Limited. And we did have a recent bullish, crossover here with the Tengen-sen crossing above the Kijun-sen. So that's the earliest signs that this, decline, this very, very long decline, could be over potentially from a price of $8.86. It dropped down to $2.07, about 59% in approximately 1.6 years. Now it's moved up a bit. So, but it's still, it's got resistance. It's also doesn't have, the profit margins are negative 39.64%. Here's a daily chart. Okay, bouncing off that 200, but still under the moving averages. How about Vertex? Vertex is inside the cloud, bursting in there, but still under the 200. No on that one. Here's the weekly chart, also looking pretty bearish still. It could certainly bounce off of these levels. You can see how it did find support at that rising on the weekly chart. At this rising 200, found support here, and bouncing off of it. But the faster moving average is still into the slower one. There are better options out there. You got a series of lower highs and lower lows here. Okay. It's in a downward channel. XLB. We got a lower high here from the prior one. And prices under the Tengen-sen. What about, that's the weekly chart. Here's the daily. Also looking pretty bearish. Energy. You can see it's dropped, right? So it was starting to show some, strength. It started to show it back on September 23rd. It moved up for 4 days and then started to drop. So losing its steam here. There's the weekly chart. Last week, closed above the cloud. But, and we did have just the Synchro-Span A, you can see just barely getting above the Synchro-Span B. And then today, today you can see that's getting back under. So I think that was a false flag right there. The other thing to also pay attention to is, the structure of the trend. Because like I said before, if you look, you'll see here that we do in fact have, oops, hold on a sec. We do have a decline right there. Do you see that? So lower highs. Okay. Let's see what else. XOM. This one here, just on the weekly chart, is under the cloud. We get a bearish cloud. Single span A is under single span B. That's not good. It did find some support at 200, but it's just something that I wouldn't touch personally. All right, Mag 7 stocks. Apple. Let's look at Apple. Apple moved up 0.66%. Stalled once again at that 260.10 level. That's the high from December 27th, 2024. That's the all-time highs for Apple in 2024. Will we get through? Possibly. I'm not liking the volume bars down here. See how those are declining as prices moving up? That's not confirming this move. ADX is, though. That's the weekly chart. Here's the daily. Just kind of still stuck in that triangle, right? So if it breaks through, that's the thing. People are waiting for Apple to come up with some idea of what they're going to do with AI. They don't really have anything set up yet, right? And they need that on their phones at the same level as Google, for example. Tesla. Now, we talked about Tesla earlier in that article. Sales may have benefited from customers rushing to buy the EVs before the expiration of the key tax credit, but some caution that momentum could fade now that the tax credit is no longer available. What we've got here is a bearish engulfing pattern today on Tesla. Look at the big volume bar. Look at that big red candle engulfing the smaller bullish candle. So it was where it was starting. This is a danger sign. It could easily drop down to the Kijinsen, which is where the next level of support is. That's about a 10% drop almost, 9.2% drop. Here's the weekly chart. It's building a shooting star. So I'm going to show you the shooting star and the bearish engulfing pattern. Okay, so this is the weekly, and here's the daily charts. So let me show you that with the candlesticks real quick. So all we need to do is go here to the bearish segment, single candle patterns. There's the shooting star. So again, if price has been moving up and this type of candle forms and price gets under the low of that candle, that's can lead to a downtrend. It's not always going to happen. Sometimes there could be some other types of news that can make it break above the high of that shooting star, and it maybe will continue. But there's a higher probability. Okay, that's what it's all about. So if you want a slight edge in the markets, you do have to look at the technicals. You should learn these candlesticks so that you know that, hey, there's a warning sign here, where there wasn't really a really strong warning sign before. And then the bearish engulfing is under double candle patterns. There it is, the bullish candle followed by that big red candle, okay, engulfing it. And so that's what I'm talking about here. So that's the bearish engulfing on the daily, and there's the shooting star on the weekly. So we've got warnings for Tesla, down 5.11% today. So if you've made some profits, not a bad time to take your profits, in my opinion. But everyone has to make their own decisions. I can't tell you what to do. Here's Meta Platforms. So Meta yesterday got under that 721.73. I said there was kind of like a little bit of a shooting star. There was a little bit of buying happening at the end of the day. Okay, and then it popped. It actually gapped up. There was the opening price right above that 721.73, and then closed above. So there's a good chance that it could continue moving up. But would I be adding a position in Meta? No. Tenkan-sen is still under Kijinsen. It's still under the cloud on the daily chart. All right, let's look at MU, Micron. Here's the daily chart. So we've got our warning candle here. It is a little spinning top. After that big pop up here, it's moved up approximately 12% from that buy signal right there, 12.44%. It's up to you to decide whether you want to hold into this. These candles can sometimes be false. It doesn't always necessarily turn into something bad. But be forewarned that, that's a reversal candle. Here's the weekly chart. The weekly chart looks much more bullish. So if I see a weekly and daily showing negative things like Tesla, then I'm more likely to exit a position. This one here looks more bullish on the weekly chart. The fact that it has that nice bullish candle, What I would do is watch the lows, the low of that candle right there. If it does drop, it's going to drop next down to the Tenkan-sen, and that's about maybe an 8% drop, 7.5 to 8% drop. Okay, so that's Micron. How about AVAV? That one looks pretty good, doesn't it? It's been moving up steadily. It's getting a little far away from Tenkan-sen Kijun-sen here, but overall, it's a strong trend. Since it broke through the cloud here, it's moved up 35.6%. So it's a very volatile stock, because any stock that moves up in a matter of 16 days, that much, 2 weeks, it moves up 35.8%. Just be really careful with something like that, because it can also drop. If this does drop, the next level of support is down here at Tenkan-sen, which is about 12.12% drop, potentially. So there's the daily, and there's the weekly chart. You can see how, again, when price breaks through a prior level of resistance, like it did right there on that one right there, boom, takes off. Not always, but again, the majority of the time. CELH, how about this one? Celsius Holdings, the beverage drink. I like these beverages. I don't know if you guys have tried Celsius. They get some nice ones, nice flavored drinks. Anyway, here's a weekly chart. So this one here, it looks like it's setting up for something. It looks like it's setting up to break through that cloud. Honestly, that's the way I'm looking at it. You can see here that it's been declining now, right? What happened? It developed this bullish candle, a hammer, right there. Let me zoom in, so you can see that very bullish candle. It pierced through the Tenkan-sen and closed above it. That shows a signal, a sign of strength. Here we are. If it can break above the cloud and above that 63.90, I think it's going to just keep going up. We've got a future bullish cloud here on the weekly. What does the daily look like right now? Well, you get the faster moving average still under the Kijun-sen. That's why I think it would make most sense to actually wait it out a little bit, get some more confirmation here, because it's going to get stuck at the high. It needs to get above that 63.50 level right there. Let me circle that for you. That candle. So Chikou span here is still under price. Tenkan-sen is still under Kijun-sen. If it comes up to this level, I think by then the faster moving average will be crossing the Kijun-sen at that point. So it will have more potential for a move up. But you have to, again, everyone needs to make their own decisions about entering. And if it depends on what time frame you're trading this on too. If you're trading it on a 2 hour, for example, it already looks good on the 2 hour time frame. So there's a 2 hour chart, okay? But you have to monitor that 2 hour chart. Do you have the time to do that? It's completely up to you. It looks like it's breaking. It's about to break on a 2 hour chart above this high right here. Hasn't done it yet, but that's a pretty bullish pattern right there too. That's called an ascending triangle. Okay, and I'll show you guys that one too. Oops, where is it? Ascending triangle. Here it is. Right there. Ascending triangle. Flat, horizontal level of resistance, followed by a higher low right there. And if it breaks through, boom, it should take off. So we shall see. And guys, that's going to do it for this video. If you like what you're seeing here and you want to support the channel, one thing that you could do is hit the like button. Another thing that you can do is also subscribe. It's free to subscribe, and hit the notification bell. Maybe share this video with someone if you haven't shared it yet with someone that might be interested in it. And if you want to get extra content, I've got member-only videos that I do each weekend where I go over my entire portfolio. You can hit the join button right here. That will pop up this little box that you see here. In order to see those videos, you would need to become a Blue Cloud Trader level member. So you have to select this level, the midpoint level here, and then hit the join button. It will give you instructions on how to join. If you want to get daily trade updates, become a Blue Cloud Legend level. So you select this level here, and you can basically get more. You'll get those member-only videos. You'll get to view some of the day trading videos I've recorded, and as well as daily trade updates, which I post next to. Once you become a member, there'll be a new little tab. We'll say membership. It'll look like this. Okay, so that's going to do it, folks. Hope you all have a great rest of the day or night, depending on where you are. I will catch you all in the next video.